What's going on, team? It's Caddy with Money Investing. I hope that you all are having an amazing day. So in this video, I wanted to address an event that can potentially trigger a wave of selling in the stock market over the next 4 to 5 days. So before we get started, if you guys enjoy this video, please make sure to drop a like because it really supports the channel and helps out with the YouTube algorithm and recommends this video to other people who might be interested in watching. Also, subscribe and hit that notification bell so you don't miss out on any future market updates, investing, and technical breakdowns. So in this video, we will cover 3 things. The first one is going to be what that event is, so what's going to happen before the second quarter ends. The next thing is how that's going to affect the stock market, and the third thing is what am I going to do and how am I preparing for what's coming over the next few days. So the first thing we need to understand is that where is this wave of selling coming from? Well, it's going to come from what's called pension funds. So pension funds are funds essentially created to provide retirement income for people and obviously grow that money by various different investments. So they're used primarily by big institutional investors that play a big role in the stock market due to the fact that they're investing with such heavy volume and hundreds of thousands of shares, if not millions of shares. So according to the data, the largest 300 pension funds collectively hold over $6 trillion in assets under management. So that's quite a big number. So because of this reason, they can pretty much dictate the market and create some buying or selling pressure if they decide to make any of those decisions. Now the next question is, well, why would they be selling? Why would they plan to sell? Well, there's a concept called rebalancing. And rebalancing is the process of realigning or reallocating the weightings of certain assets in your portfolio. To give you guys a simple example, if there's a portfolio that has 50% in stocks and 50% in bonds, and if the stocks outperform the bonds, and later on your new portfolio weighting is 70% stocks and 30% bonds, an investor might choose to sell some stocks to rebalance or realign the portfolio back to 50-50 depending on the risk assessment and the investing goals for that portfolio. So now you guys can see that Wall Street is already anticipating a huge sell-off, and they are estimating a wave of selling with different estimates. Wells Fargo estimating close to $35 billion, while JP is estimating close to $65 billion, and Goldman Sachs estimating close to $76 billion. And globally, we're looking at over $170 billion that can potentially flow from equities. Now, if these pension funds are going to be selling stocks, where's all the money going to? What are they purchasing next? Well, there's another concept called flight to safety or flight to quality, which is a financial market phenomenon when investors sell what they perceive to be riskier investments to purchase safer investments like bonds and gold. Again, this is an interest to rebalance the portfolios because we're talking about pension funds here, and these are retirement income for actual people. So the people managing the money need to be very careful from a risk perspective. So now talking about the stock market in general, in the second quarter alone, the markets have gone up over 21%, which is an incredible gain in a very short period of time. So you can see why investors would be a little tempted to sell some of those positions and buy into bonds, which are going to be a little bit more safe considering the market volatility and uncertainty that is around the stock market right now. So this can most certainly bring a lot of volume and a lot of volatility in both the stock market and the bond market. And according to this chart, you guys can see that Bank of America estimated that in 2020 alone, we can see a flow into bonds of close to about $1 trillion. So the real question is, who will follow? Meaning, if the pension funds start selling, will hedge funds, retail investors, other institutional investors will follow along, because that can potentially create a wave of selling and result in the prices going lower? Or are people going to stay put with their holdings and their positions regardless of what the pension funds do? Because in the long term, we do see the prices going back to all-time highs. So to answer that question, we need to first understand what pension funds actually trade or invest in. So they're primarily in those big tech stocks, they're in blue chips, they're some of those heavy weighted, heavy volume stocks like Amazon, Apple, Microsoft. Now, regardless of how the market does over the next few days, whether it drops 5 to 10% or if it stays flat, I'm personally going to be holding every single position I have in my portfolio and not be selling, regardless of the fact that what happens with the pension funds selling their positions. Because again, this is not a type of panic selling, and they don't see those stocks as being overvalued or not very good deals. The only reason behind this rebalancing is in the interest of the people that are in the pension fund, that have the money in the retirement account, so that they're moving away from riskier assets into something more safe like bonds and gold. Because again, we're talking about people that are over 65, that are about to retire, and they're going to start withdrawing from those pension funds, which need to be protected from a risk perspective. So from the eyes of the pension funds, these are not stocks that they would ditch over the long term. It's just a concept of rebalancing that they need to do, and they need to meet certain criteria and certain goals before the second quarter ends. So I hope that makes sense. So personally, I would be waiting if the market does sell off anywhere between 5 to 10%, because again, these stocks are going to be very discounted provided how much value I see in these companies, and they will be trading at a discounted price, which could present a good buying opportunity for myself in the long run. Again, please make sure to do your own analysis and your own research when it comes to investing in the stock market. But I wanted to address this idea and this event that can take place over the next few days, and what we can expect and how we can better prepare ourselves for what's coming. So now quickly going over the S&P 500 index, which is the stock market benchmark index that we like to follow very closely. And then I'll also go over the total volume index, which essentially goes over the total volume for the New York Stock Exchange. And I want to highlight some of those key volume levels that we have identified from previous quarters when we have seen these spikes in volume, which can result in a higher volatility environment. So Q1, which is the first quarter, is going to be January, February, March, ends on the last day of March. Second quarter is going to be April, May, and June, ends on the last day of June, which is just a few days away. Third quarter is July, August, September, which ends on the last day of September. And then the last quarter is October, November, December, which ends on the last day of December, December 31st. So going back as far as 2017, you guys can see that right around that area during the last week of that month, we have seen a spike in volume. So right now I'm looking at the total volume index. The ticker symbol is TVOL if you guys want to check that out for yourself if you're on your TradingView platform. But essentially tells us how many shares are being traded on any single day on the New York Stock Exchange. So you guys can see that on December 15th, we had a spike of close to 200% when the volume jumped. This right here is going to be Q1 of 2018, which is going to be March 16th, right around that level. Now, this also takes into account the quadruple witching Fridays, which is an event that happens again 4 times in a year, every third Friday for the month of March, June, September, and December. So when you put the quadruple witching Fridays with the fact that the portfolios need to rebalance before the end of the quarters, we see a huge spike in the volume. This essentially represents that institutional investors and big hedge funds and pension funds are essentially making some type of decisions, whether it's buying or selling, because they are trading in such high volume, which I've already mentioned in millions of shares, if not billions of shares. So you guys can see that I've marked every single quarter for the last 2 years and how the volume has spiked. More recently, going back as far as Q3 of 2019, this was right here in September when the volume jumped close to 238%. And then moving forward to the last quarter of 2019 in December when the volume jumped close to 189%. So moving forward to this year, this right here is going to be 2020, and the volatility in the volume in general has been quite high than the normal because of the global pandemic. But this right here was going to be March 20th, again quadruple witching Friday, tied into the fact that we are towards the end of the quarter. We saw a huge volume spike, close to about 58% increase, and on that day we traded close to about 2.7 billion shares. And then more recently, I updated everyone essentially going over the fact that June 19th, June 20th is going to be again a quadruple witching Friday, and we saw a huge spike, close to about 3.5 billion shares that were being traded. And if you were to pull back on this volume, we haven't reached this volume as far as March of 2017. So 3 years ago is when we reached as high as 3.5 billion shares. So now moving forward, we can potentially see a volume spike again, maybe close to 2.5, 3 billion shares traded, depending on how much selling pressure comes from those pension funds and from institutions. But going over the S&P 500 index now, ticker symbol SPX, I've already did separate analysis on the index and where do I personally see the stock market going in the near future. But I wanted to address the idea of having a very clear resistance at 3150, which we have recognized in all of my previous market updates. And this right here is going to be a kind of like lower lows that the pattern is making, kind of a descending low that the pattern has been forming, and it's not able to break out of this resistance. So until we see some volume come into the markets and essentially take the pattern, break out of this 3150 resistance, I still see the pattern kind of rolling over because it has been making lower lows. That is a sign of weakness and an indication that the pattern might pull back. I hope you guys enjoyed this video and my complete breakdown on what to expect in the markets moving forward over the next few days, and my quick technical breakdown of both the total volume index and the S&P 500 index. As always, if you guys enjoyed this video, please make sure to drop a like because it really helps out with the YouTube algorithm and recommends this video to other people who might be interested in watching. Also, subscribe and hit that notification bell so you don't miss out on any future market updates, videos related to investing, and technical breakdowns. As always, happy investing, and I will see you guys in the next video.